It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we continue in the holiday mode for most people. It is a Tuesday, January the 7th, kicking back. I hope that's what you are doing. In just a moment, we kick back into the time tunnel this morning. We are travelling back to July of last year as our summer series continues.
The Real Estate Podcast wishes you and your family a fantastic Christmas break and a happy new year ahead. You're listening to the summer series on the Real Estate Podcast.
Arrears have risen over the past few quarters, really since the June quarter of 2022 when interest rates were starting to rise. But it's worth noting, even with an increase in the rate of arrears, it's still very small overall. It sits at about 1.6% of outstanding housing credit that's coming in more than 30 days late. So I think when we talk about the increased risk around mortgage serviceability when you've got weaker economic conditions and higher interest rates, it definitely flares up, but it flares up in certain pockets of the market. Some of those pockets we've seen are the more outer suburban peripheral areas of Sydney and Melbourne, where housing is expensive and you've probably got people on slightly lower incomes struggling with their rising mortgage costs.
And talking about the property market being expensive, Australian dwellings, let's talk about the values, which of course increased a further 0.7% in June, taking growth to 8% across the financial 2023 and 24 year. Now, this is the equivalent of around $59,000 you guys have reported on increase to the median dwelling value in Australia, which is now at $794,000. And beneath these reported numbers, of course, the market is running at different speeds. Now, that won't mean a lot to most people feeling very happy, of course, that the 23-24 financial year is seeing growth on their properties, but it is a factor, isn't it, this two-speed market?
Yeah, I think that's one of the things to understand about housing values rising month after month after month is that increasingly it's being driven by a select few markets. And what we're finding is that about 70% of the growth in home values in the combined capital cities for the month of June was driven by Brisbane, Perth and Adelaide. These are relatively affordable markets, although Brisbane has admittedly become less so in the past few years. But what that suggests is that in a high interest rate environment, especially where borrowing capacity is limited, people who want to buy property are being skewed to the more affordable markets. At least in the past 10 years, this is the highest level of diversity that we've seen in the annual capital growth trend, which ranges from a 23.6% increase across Perth in the financial year, all the way down to a fall of 0.1% across Hobart.
Yeah, and having a look at that demand, because you've got those two converging factors. You've got the demand on one aspect and the migration that you touched on, interstate migration happening, and then all these international migration people that are coming into Australia. It's just, do you feel that it's like pouring petrol onto the fire at the moment with the way the migration is going?
It's definitely added to what was an already tight market through the COVID period. When Australia's borders were closed to overseas arrivals in 2020 and 2021, we saw an increase to housing demand anyway. And that's because people's incomes at the time were rising. It's because average household size fell and people domestically spread out across the market. That pushed prices higher. It also really tightened up the rental market. And so the reopening of Australian borders was adding fuel to that fire. It is worth noting that part of the reason net overseas migration is so high right now on a broad basis is because we're still playing catch up. Those people who didn't come to the country through COVID border closures are now arriving. And we've also seen fewer departures. because usually by now, people who would have arrived a few years ago, temporary migrants, would be leaving again. But they didn't arrive, so we're not getting the departures. So that's why your net overseas migration is so high. And it also comes back to policy frameworks around migration as well. If you have a more targeted migration program that is perhaps more aligned to the delivery of housing supply, then you can avoid the mismatch that we're seeing in the supply and demand of housing at the moment.
Every week we present so much real estate.
There is this growing demand too for attached dwellings in Brisbane at the moment. The supply just isn't keeping up with the demand, right?
That's exactly right. So in terms of building completions, we hit a peak in 2017 here in Brisbane. Since then, the rate of completions, especially in that attached dwelling market, has been declining. So at the same time, we've seen demand for these types of products increasing. And because of that, there's been a mismatch between supply and demand. And this is why we've seen such strong growth, specifically in the attached dwelling segment of the market in Brisbane over the last 12 to 24 months.
Yeah, and I just want to pick up on that point because obviously you're dealing with, from time to time, first home buyers, particularly when mum and dad are paying for that service. And you can see why people are just so frustrated that they are finding getting that mortgage a little bit more difficult and the market is just getting away. It always used to be the life raft, and in a way, get into a unit, it's much cheaper. But when you talk about that growth in the unit market over the last 12 months, that paints a pretty dire picture for people trying to get into the market.
It is tough, and it has been tough for first home buyers for some time now because the pace at which they can put away their money to save for a deposit is being outpaced by the market growth that is happening on a month-by-month basis. So we are seeing more and more first home buyers turn to the bank of mum and dad, looking to, help them to get into the market. And that's being demonstrated on the ground by some of those parents helping their sons and daughters at auction just to secure properties. So that FOMO, or that fear of missing out, is really an intergenerational thing, as parents are seeing their children priced out of property markets and they're doing whatever they can to help them get a head start on the property ladder.
And good morning to you, Matthew. Welcome back to Australian soil after jetting around Europe. How was it?
It was amazing. We did 9 cities in about 30 days with a 2 and a 4-year-old. So a lot of travel, a lot of commuting. We crammed a lot in, but it was the trip of a lifetime. We couldn't have enjoyed it more. And then we finished in Dubai after Europe for about 4 nights and just had a slower paced few days before we got home, which was a nice way to finish.
Hey, I've got to ask you, so many people these days, they head off to Europe and you can set yourself a budget. People that I know that have headed off for holidays, particularly to Europe, they just crash over and above that budget. Is that what happened with you?
Yeah, look, we did pretty well with all the pre-planned stuff in terms of accommodation and all the flights and everything else. But a lot of things that I didn't expect when we got there. So we were traveling with 5 people most of the time because we took a nanny with us to help with the kids. And so then we needed a van for all of our luggage and enough seats. And just on car transfers from airports, train stations and so forth, we might have spent $4,000 or $5,000 there. So that wasn't factored in, and they were expensive. Like the vehicle transfers and the Ubers in Europe, I thought were really quite expensive. And then obviously throughout Europe, wining and dining and everything else, it is pretty expensive. It's a pretty tough place to try and do a cheap holiday if you enjoy nice food and nice wine.
Yeah, so in terms of the food, is that the area that you really noticed that you were spending some good coin on?
Yes, but to be fair, like my wife and I really love fine dining restaurants. And so we were choosing to spend a fair bit in a number of places. But even when we wanted to just go and have a family meal and some pretty normal type food, it was still reasonably expensive. The one thing that we did find, though, is local wine in Italy or local wine in France or champagne in France was very reasonably priced compared to Australia. And then certainly compared to Dubai when we got there. We saw a bottle of champagne in France for $100 and then saw it on a wine list in a restaurant in Dubai for $600, the same one. I'm sure there's ways to do it a little bit cheaper, and we tried to do that on occasion. But yeah, it was a pretty elaborate once-in-a-lifetime trip for us, so we didn't hold back too much.
Indeed. And we should talk about the rental market, of course, such a big issue right now, right across Australia at the moment. Is there any positivity in the market that you can see?
Yes, let's finish on a high note. So I saw this trending before I went away. Over the last few months, we have seen a jump in the number of properties available for rent, which is great to see. It happened quite quickly, to the point where we had to quickly adjust some of the pricing on some of our rental properties for our clients because we've been chasing top dollar for so long. And then all of a sudden, additional supply came in and people were going out and viewing 3 or 4 options as opposed to coming in hat in hand saying, please, can I have your property? There was a pretty quick change there. So the vacancy rate has increased a little bit, but it's still at very low levels. Again, this is not a complete solution, but it has just taken the pressure out of that rental market a little bit. It has resulted in our rental median price stagnating at $650 a week for the past few months, which is good that it's not increasing and putting more pressure on vulnerable populations. So some good news there, but it remains to be seen whether that's an ongoing trend or whether it's just an anomaly with a bit of stock coming in and it's going to be soaked up and we'll be back to where we started again. So the next few months will tell us that.
Just how bad is this from your perspective with what you are seeing?
Oh, good morning, Craig. And I think it's ridiculous at the moment. Everyone from every state is suffering and it's getting worse, in my opinion.
The ongoing cost of the living squeeze and, of course, a shortage of dwellings, it is a concern for people being locked out of the market. How do you combat that when talking to people from your organisation, when you're talking with people that are really feeling the effects of what I've just mentioned?
Of course. In our field, a lot of people that come through are people who are at their wits' end. They have been searching for properties for months, for weeks, even sometimes for years, and they are really pushed out of the market because they can no longer afford what they would have been able to afford when they achieved their last rental property. It is forcing people to move away from areas that they're currently living in. Can you go and afford a $750 a week property if you're on one single income? Or is it better for you to half the cost of rent by living with someone else? You can't afford, it's not realistic. Wages aren't going up. People can't afford rent anymore. It's either move back in with family, move state. I even had a girl, she lived in Sydney, couldn't afford the rent anymore. She's moved to Bali. People are moving. You know, if you move to Queensland, it might be a little bit cheaper to get a house, but that means picking up your life and moving state. It's hard for people to do. So they're doing what they can do in order to survive and be able to put a roof over their head, and sharing is what we're coming down to at the moment.
That was pretty interesting. Just before the break, you were saying that you had somebody, she decided, I can't afford Sydney, I'm going to move to Bali. We did mention that a couple of weeks ago, that it's not one-offs where people have decided to go to cheaper countries to live.
Yeah, well, now that work can be remote and sometimes you can work from wherever you can, it's easier to just go and live overseas at this point, and it's cheaper. And if you're out of the rental market and you can't afford it, this is what's happening.
Coming back to the stress point of all of this, you get people that get in contact with you, they're at their wits' end. They just don't know what to do. And then you've got to, I guess, look at what they can afford. Now that you're outside representing other areas outside of Sydney, at least you're able to steer them into another state, another region, if that's what they're wanting to do.
Absolutely. So we really work closely with our clients, and we'll go through their applications, through their, affordability, their criteria, and then make sure that we're having that very realistic. And sometimes it's a hard conversation to have because people don't want to hear it. But we have to be honest with them and say, look, this is achievable, this is not achievable, but why don't we try and look at this area or this state, or change your application in a different way? Because sometimes it's just a matter of they don't have their application put together properly, and that changes the whole process.
We connect you to the best real estate information across Australia. The Real Estate Podcast.